All right. So good evening to you, colleagues. I would like to welcome you to our first official session of AUI 3702 tutorial class for the 2024 academic year. So my name is Mr. Privilege. I'm the tutor with Grad Consulting that will be taking you guys through the module throughout this semester. Now, I just wanted to start off by giving you the outline of essential topics in the module that you need to know. But like what I'm going to indicate today, or rather what I'm going to focus on primarily, it will be on the aspect concerning business cycles, right? Why is it that I focus a lot on teaching you guys on the concepts of business cycles, which is actually topic number 6 of your topic in the outline of this module, right? So obviously, before we get to that, I just want to start off from the first topic, what it is all about, and following that sequence until we get to the last topic. So in topic 1, like it's a very common topic. Excuse me. It's a very common topic that you find also in several other internal audit modules, like for example, AUI 2601, which is a second year level module. They also deal with this principles of the International Professional Practices Framework, or the IPPF requirements, and guidance for performing engagement procedures, test of controls. Okay, guidance for performing engagement procedures. This one, obviously, it's what you really deal with a lot in AUI 37002, but you also see a bit of it in AUI 3701. Not so much of it in 2601 because it's still a second year level. They are really dealing with the module with auditing rather at the surface level, but not necessarily in detail. Then topic number 2, it introduces you to this issue concerning corporate governance, guidance concerning corporate governance. Now, with corporate governance, they touch a bit or a lot on the King 4 report, but in this module, I've not seen much about the corporate governance principles being tested in AUI 3702. Yes, it's a principle that they might want you guys to know. However, from my experience and what I've seen in your past assignments, past exam papers and all, the concept of corporate governance is not heavily examined as such, right? But what is heavily examined is what you see me having outlined for you right here, right? Okay, just a second, colleagues. Right. Now, in topic number 3, the deal with control-based practices for conducting engagement procedures or test of control. So in other words, that's where you get introduced to one of the aspects on business cycles that you will be examined on, which is, of course, concerning audit engagement procedures, how to perform test of controls. All right, if they ask you to draft audit procedures, or what they call test of controls, there are principles that governs how an audit procedure or a test of control is supposed to be formulated. So you get introduced to the principles around that in topic number 3. Then in topic number 4, we begin to look at the internal audit process, which deals with 4 stages. Now, those 4 stages, we're introduced to them actually in AUI 2601. I'm gonna unveil all of those things as we progress, but there's about 4 important stages. One of them is the pre-engagement stage, and there's a planning stage, conducting the audit, and then reporting. Actually, it's 5, and then the last one is actually where you do follow-up and monitoring, right? So those are the stages you find in the internal audit process. Topic number 4 deals with those principles. Topic 5, it's about developing engagement procedures. So similar to what you were now being introduced to topic 3. Topic 3, really, yes, there's aspects about audit procedures, or what they call test of controls. Now, when you talk of audit procedures, it's not only limited to the test of controls, but it's also it also involves what we call substantive audit procedures. So when you talk of audit procedure, it's a very broad umbrella on how auditors can gather audit evidence. So we can gather audit evidence by performing test of controls, which is really aimed at testing the adequacy of internal controls within an organization. That's what test of controls is all about. It's just testing the adequacy of internal controls within an organization. Whereas with substantive audit procedures, which is another aspect of audit procedures umbrella, right? Substantive audit procedures, they're aimed at testing the evidence that is presented to you, right? So it could be financial in nature under normal circumstances. So when you want to test, for example, on whether the balance that has been given to you in the financial statement, for example, revenue balance, and you want to, to just test the accuracy of that balance, the type of procedures that you would perform to test or to gather evidence to substantiate whether the revenue balance is accurate, those procedures, we call them substantive audit procedures. So those are some of the aspects that you see covered when you go to topic number 4, developing engagement procedures. Now in topic 6, it deals now with what I want to talk about in this particular session at a high level, obviously. So it deals with what we call developing engagement procedures for the different business cycles. I'm going to come back to that. I don't want to explain so much as yet. I just want to go to topic 7. Topic 7 deals with reporting the results of the engagement procedures, right? The test of control. Now, in topic 7, that's where you get introduced to the principles of audit finding. So in an exam scenario, they can ask you to draft an audit finding. When they ask you to draft an audit finding, what they are really testing you on, they're just trying to test your understanding of what an audit finding is. An audit finding comprises of 5 elements, which can be outlined as the criteria, a condition, a cause, an effect, and then a recommendation. Now, value of an audit is driven by what the auditor gives as a recommendation. So what management is interested in, they're interested in knowing what their problem is, and at the same time, the solution to their problem. So the solution to their problem is what you give as a recommendation. So essentially, whenever you are asked to draft a recommendation for management or for the board of directors for that matter, you must know that they are really asking you to give a solution to the identified problem. Hence, I indicated the problem being the cause. So always your recommendation statement should be addressing the cause, not the condition, guys. Because you cannot have a deviation or a condition without the cause behind it. There has to be something that triggered the condition that we are experiencing now, or the deviation that you are having now as an organization. There has to be something that caused that deviation to be in existence. That's what the recommendation we as auditors give should address. It should address the cause, right? Very important, guys. But I'm going to explain about this when we get to that place in this journey. But essentially, in topic 7, this is what they are really dealing with, right? Now, I want to come back to topic 7, as I indicated that I wanted to give a focus to topic 6, rather, not 7. Topic 6. Why is it that I'm saying that this is one of the core topics of note when it comes to AUI 3702? Now, if you look at different past assignments, you look at past exam papers, all right, you discover that most of the questions you are getting there, guys, they are testing you on a particular business cycle. And that particular business cycle, it can range from an inventory and production cycle, it can be acquisition and payment cycle, or what they call, just so that I can write this down as well. All right, if it's not titled acquisitions and payment cycle, they can call it purchases and payment cycle. Okay, let me do this so that you can see this clearly, right? So when it comes to business cycles that you see examined in the past exam papers, or you see them even in the past assignments, I'm going to do that activity as we progress. But for now, I just want you to understand the fact of the business cycles. What is that thing that is important about business cycles that you need to know so that you can be able to be in a position to answer those questions they give you in the assignment, those questions they give you in the exam, right? So obviously, so I had mentioned inventory and production cycle. With an inventory and production cycle, what is the objective of that cycle? The objective of an inventory and production cycle, it is production of physical goods. Because when you're producing something that is physical, something that is tangible, a product. And that product is then can be identified as an inventory item when we go to the company warehouse. Now, inventory exists in different forms when we go to a warehouse section of a company that produces goods. It can either exist as, I'm just going to write this in abbreviation, either as raw materials, right? I'm talking of the inventory. When you go to a warehouse section of a company that produces goods, all right, you can have inventory in form of raw material, or you can have inventory in form of what we call work in progress, meaning a product that is not yet fully manufactured to its finished goods state. Then the last one, it will obviously be what we call finished goods. So when you're talking of inventory, all right, in the context of a company that produces goods, these are the three groups of inventory that they will have in their warehouse section. So you can get a question in the exam that deals with a company that is into manufacturing. So what should come into your mind is the fact that, okay, what kind of inventory items would this company have? They would either have raw material, they would either have work in progress, or they could have finished goods. So now, how do you know what kind of inventory they are having? That you can only find or figure out when you go through the scenario, the case study that they would give you, the system description that they would provide to you. That's how you'll be able to know, okay, what type of an inventory item are we dealing with here? Is it a finished good? Finished good simply referring to that type of inventory state which can be usable by the end user. In other words, now it's ready for use. Work in progress, it's still in the process. It's not yet fully manufactured. Raw materials, these are the different elements of the finished product that have not yet been assembled together, right? That's raw materials. Then we have acquisitions and payment cycle, because I'm just trying to help you guys to understand what are the objectives of each one of those cycles before we even look at the things that are examined by the examiner, right? Okay. But at a high level, I'm not getting into details as yet in today's session. Then secondly, we have acquisitions and payment cycle. Acquisitions and payment cycle can also be referred to as purchases and payment cycle. What are these? What is this cycle all about? And this particular cycle, by the way, we find it almost in our common day-to-day activities. When we go to companies like our grocery stores, right? The likes of your Checkers, the likes of your Spar, the likes of your ShopRite, you say, you know, whatever the name of a grocery store that you guys go to buy things, whenever you go and acquire certain items from them, the cycle that you are engaging in from you, the party that is buying, it's acquisitions, it's purchasing and payment. You are buying something and you're paying for it. Whether it's you buying the item and paying for it later, it is still purchases and payment cycle that is taking place. So even in the context of you as an organization and you are buying certain items from another company, right? What process are you following there? It's called purchases and payment cycle, or sometimes they call it procurement cycle, okay? But it's one and the same thing. So these are activities that we do on a day-to-day whenever we are buying certain items which are already ready for use, by the way, which are ready for use. So what is happening there is called purchases and payment cycle when we are buying certain items for use within our organization, right? Okay, then we've got what we call a revenue and receipt cycle. With a revenue and receipt cycle, we also see this again on a day-to-day basis. Now, with revenue and receipt cycle, it works different from inventory and production cycle in the sense that it can either be revenue that we are making as a result of selling finished goods, or revenue that we are making as a result of providing a service to our clients. Think about it in the context of tutorial services that I'm offering to you guys. You have paid me for me to supply or to offer you a service in the form of tutoring. And what am I making out of that? I'm making a revenue through the fees that I'm levying to you guys. So what cycle am I following as a business? I'm following what we call revenue and receipt cycle, but by providing a service product to you guys. Now, when you go to a company that is selling physical goods, right? It could be commodities like your day-to-day product, right? You go to your Checkers, what Checkers is doing when they are selling those grocery items that you guys are buying from them on a day-to-day basis, they are simply following a revenue and receipt cycle. So they are selling something to you, and in the process, they are generating revenue, right? So now when you're looking at it from an audit perspective, we are looking at a breakdown of that process that they are following. And we want to evaluate the activities that are taking place within that cycle from when it starts, what transpires in between, and what happens when we reach to the end of the process. That's what business cycles is all about. So we want to understand, from an audit perspective, we're looking at, okay, when I look at this particular cycle, I want to understand what is happening when the process begins, during the process, and what happens at the very end of the process. So that's what we are interested in as auditors, because when the examiner brings questions, they are either asking you about things that are taking place right at where the beginning of that cycle starts, and they want to test you on events, activities that are taking place there. Now, during the process of those activities that are being performed by the organization, there can be risks that the organization is exposing itself to, be it as a result of certain things that they're not doing right, or it could just be because maybe they've got certain weaknesses that they've not necessarily addressed. So now, because of those weaknesses, they are opening themselves to danger. Now, the examiner will be interested in finding out what are those red flags, what are those weaknesses that are evident in the process that seems to suggest that, okay, they are not doing something right. Those are weaknesses. And then if they are not doing something right, what are the negative outcomes? What are the dangers that this organization is exposing themselves to at that particular stage within the cycle? That's what they call risks, guys, in simple terms. And then at the same time, because you are an auditor is supposed to think. An auditor is expected to add value to the organization. How do you do so? That's why they ask you to give internal controls, recommendations. Right over here, I'm going to talk about this, but I'm also trying to bring in some of those elements as I discuss the business cycles. Because those are the things that they ask you in the assignments. Those are the things they ask you in an exam situation. So they'll always give you a case study scenario. That's standard. And then they ask you about those activities that are taking place there. And we're going to talk about those things. But anyways, so with the revenue and receipt cycle, as I was explaining, you can generate revenue as a business by selling a product which is physical in nature, or by selling as a product which is a service in nature, an intangible product in that regard. Then number 4, we've got what we call payroll and personnel cycle, or what they call the human resource and the payroll cycle. Now, with this particular one, it's one of those that is existent in almost every form of a business organization that you can think of, whether it's production, whether it's a service or industry or mining industry or whatever, be it that it's a doctor, medical fraternity, for example. Maybe it's a doctor that has got their own private hospital or whatever the case. They would definitely have to conduct or perform the human resource and payroll cycle. Why am I saying this? Simply because every organization, depending on the size, they will definitely employ certain people to perform certain responsibilities in that organization. When they hire people to perform those responsibilities, the process they are following, it's called the human resource and the payroll cycle. Why am I saying this? You would hire somebody who is competent for the position. And when you hire them to perform certain activities because they're competent for them, you have to remunerate them for their services. That's where payroll comes in. right? So we want to understand, okay, how do you remunerate your employees? Are you doing this in line with the law? Are you observing certain policies that has been drafted within the organization? Is there any form of fraudulent activity that can be, that is being perpetrated within the organization as far as payments of salaries, payments of wages to the employees is concerned? So when you're looking at this particular cycle, guys, those are the common things that you'd find, especially payrolls, the aspect of payroll within the HR and payroll cycle. Human resource, it's really dealing with people. How do you recruit people how do you recruit competent people for your organization? What is the hiring process that you're following? Is it in line with the law or not? Because when it comes to those things, they have to be according to the law. The same thing with the payroll. Think about it, guys. You know that your tax tables change almost each and every year, or your tax scales from SARS changes almost on an annual basis. Think about it. If ever the company does not update their payroll system for last year, 2023, they don't update it for the 2024 tax period, do you think that the tax that will be paid by the employees in that company will be accurate? It's a question. Do you think the tax paid by the employees will be accurate?
No, it wouldn't be.
Yeah, the answer it's obvious. The tax will be inaccurate. So during the payroll and the human resource and payroll cycle, we're able to identify some of those things, because it's also possible we can have somebody who's incompetent in the payroll division. Maybe it's a manager that does not even review those things. And then already we've got a new financial year that is at hand, and they have not updated those things, and they pay salaries to people. So obviously it implies the tax that has been deducted for that particular month, it will be inaccurate. And now the company ends up having problems with SARS. So we as auditors, when we come in, we're going to be reviewing now to see, okay, the deduction schedules of this organization, are they up to date or not? How do we know? We compare the prior year to the current year versus, of course, the standard ones according to the to the government, because most of these are regulatory related. Think of your tax tables, think of your pension funds and all that, your medical aid deductions, all of those, they are legalized in that regard. So obviously we are interested in knowing, okay, are they keeping things up to date or not? If they're not, then we give them a recommendation of systems that they can put in place in order to ensure that their systems are always up to date, right? So with the payroll and personnel cycle, guys, it's dealing with the hiring or recruitment process of the organization, and of course, how they are remunerating those people for the services that they are providing to the organization. Now, number 5, it's called bank and finance cycle. With the bank and finance cycle, I've not really seen a question where they are testing you on this in AUI 3702. But I'm not necessarily saying you must ignore it or that you should not be familiar with it. I just put it there for interest's sake, but I've not seen questions where they are testing you on that. There are questions that I have from a question bank by your lecturer, and I've not seen any question where they are testing you guys on bank and finance, right? Now, these questions, by the way, these are simple questions that that can be useful when you're doing your preparation for the exams. I'm also going to show you with past exam papers, things that are commonly tested in the exam, right? And those are the things you must study now. Those are the things that you must study. But yes, as much as you can know how to draft a weakness, but if you don't know the principles behind each one of these cycles, if they ask you about revenue and receipt cycle, and they ask you to identify weaknesses during the ordering process, right? Processing of a customer order process, all right? And if you don't know what is happening during the ordering process, you may not be able to answer or respond what the examiner wants. So there's also a way by which you can study the cycles so that you can be able to answer questions that are in line to what the examiner wants. So I'm going to also teach you guys how to study business cycles, even from your prescribed textbooks. All right, so that was to just give you an outline of the business cycles and what each one of those cycles really deal with. Now, I want to talk about number 2 element, which is to do with assumed knowledge, or what I call examinable items. Now, assumed knowledge is the same thing as learning objectives that are tested, or aspects that are commonly tested in the exam, okay? Hence, I'm saying assumed knowledge and examinable items. Now, auditing, colleagues, you need to understand something about auditing. Auditing is equals to thinking. Auditing is equals to thinking, right? As much as, yes, you study the cycles, all right, so that you understand what is going on, what are the stages within the individual cycles, questions you would get in the exam, they will not always be the same. Yes, it can be an inventory and production cycle, but industries may not be the same. It could be an inventory and production cycle for a company that is producing bicycles. It could be an inventory and production cycle, maybe for a company that is creating toys, maybe for a company that is producing cakes, you know? So yes, it's still manufacturing. The principles are the same. However, but you need to understand that it will be for different organizations doing different things altogether, but the principles remain the same. All right. So how do I study business cycles? What is this the approach that I should use? For example, if I look at inventory and production cycle, number 1, I need to be able to identify the phases, functions, or stages that are existing within that cycle, and I list them down for myself. Within those functions or stages within that cycle, it could be 5 of those stages. I need to be able to understand the blueprint. What is the prescribed principles that have to be followed underneath each one of those stages within the cycle? What is the norm? What is expected to be done? For instance, during an inventory and production cycle, the first stage, it has to do with ordering of raw materials. So when you're ordering raw materials, okay, what exactly takes place according to the blueprint? I'm talking your prescribed textbook here. That is the blueprint. What is it that takes place? What is it that's supposed to be there? Who are the people that are supposed to be existent? What documents are they supposed to be using? What standardized procedures are they supposed to be following? If I know these things, guess what? If they ask me to identify red flags, I look at things that are supposed to be there, which are not there. That can then give me an indication that, okay, we have a problem, we have a red flag, a weakness in that case. Same thing, also, I can be able to identify the problem that the organization can face based on the loopholes that they are having, of course, and I'm looking at the blueprint and I'm using that to measure what the organization is doing at that stage for me to be able to know, you know, what could be the potential harm that could come to the organization in that regard. But at the very same time, because I know the blueprint and I'm looking at what this organization is doing wrong, I can be able to add value by giving them the correct activities or standardized procedures they must be following. Why? Because I know the blueprint. Do you understand? And the blueprint, that's what I refer to as a system description for each one of those respective stages within the cycle. So each one of them you need to study, guys. And when you're studying these things, you must break it down in the sense of saying, okay, number 1, okay, if I'm looking at this first stage in the inventory and production cycle, for example, which is ordering of raw materials, okay, what is the objective of that stage? What do they want to achieve at the end of the day? That's number 1. Then number 2, I think about, okay, who are the people that are performing certain activities there? Why am I saying I need to know the people performing certain responsibilities there? Because people are a form of control measure that can be put in place by management. Then if I know the people that are participating in that stage, I need to question myself, okay, so what are the documents? What records are they creating during the process of ordering raw materials from the supplier? Do you understand, guys? I don't know if I'm making sense.
Yes, you are.
Yeah, so that's how I'm able to then put all these things together to then identify the standardized procedures within the blueprint, which is number 4. So number 1, when you're studying the stages within each cycle, understand what is the primary objective of that stage or function. phase in that cycle. So know the objective. What do they want to achieve? If we're ordering raw materials, what is the primary objective there? The primary objective obviously is to ensure that we acquire raw materials from the suitable suppliers. And these raw materials, obviously, they have to meet the criteria of quality, standards and all of that. I'm just mentioning just a few things there, which are within the umbrella of the objective within the ordering of raw material stage in the inventory and production cycle. Now that I know this, then I question myself, who is responsible for buying these raw materials? Who are the people, or which department rather in the organization is responsible for buying the raw materials for this organization? It has to be procurement. But how does procurement people get to place orders with the supplier somewhere? They have to have some sort of systems in existence in the company that gives them the need for them to initiate the order with the supplier. And that's where warehousing comes in, guys. Because the warehouse will tell them, or production rather, in this case, because production will tell them, look, we're running short of raw materials, so we need to get more raw materials for us to continue with production. Then obviously they take that to procurement then places the orders with the supplier. So what are we addressing here? We're addressing the people involved. Then we're talking of the documents and the records that they are keeping. So the documents, obviously, it will be something that can be transferred from one party to the other. So for example, if I want to buy raw materials to a supplier, there has to be some sort of a document that is used in that process. What is that? Obviously, we need a supplier order. There have to be supplier order forms that are used. There have to be purchase requisition forms that are supposed to be used. There have to be quotations, at least about 3 of those from different suppliers that we have in place so that we know that the suppliers that we have bought from are the most suitable ones and reasonable ones for the organization to use. All right. So those are just some of the elements, guys, that should come into your mind when you are studying the cycle. So when you're doing your summaries, you can do it like this. Okay, but I'm going to amend this. I'm just going to give this just as a typical guideline. But I'm going to send you the updated version of my notes because I just revised. In fact, I'm in the process of revising some of my notes to ensure that we are aligned to certain things here that I've picked up. Now, I'm just going to use the inventory and production, but I'm going to amend it slightly to add, for example, the objective. So you discover in some of my summary notes, yes, these are the functions or stages or phases in the cycle, which is stage 1, stage 2, stage 3, 4, 5, 6. Material requisitions and ordering, receiving of raw materials, storage, etc., etc. Those are the different respective stages, right? But I'm going to revise a few things on that. And then you discover I do give an outline about, okay, so who are the people involved there under each one of these stages? Okay? What documents and records are these people using at each one of those stages? If I know this, all right, and then, of course, I'm going to add, for example, the objective of that cycle, the standardized procedures that is supposed to be taking place. I'm going to add that to my notes so that it becomes easier for you guys to study them even in using your textbook as well, right? I'm going to send the notes in a Word document for you guys. But this is just to give you a guideline how you can summarize business cycles for yourself. Notice this is not so complicated. It's not like you have got 20 pages of summaries somewhere, but I try to make sure that it's simplified for you guys. All right, we're gonna connect just now, guys, because I think this session is gonna end just now, but we're gonna reconnect shortly, just in the next minute. We're gonna reconnect just in the next